This is the setup that I look for every single day live on the Discord. I'll be explaining all the trades that I was looking for in the past week, the ones that I trade, the one that I did not, the one that I missed, all of the details I'm going to be explaining in the video. Make sure to watch it till the end. I already talked about the strategy before, so make sure to watch the main video. If anyone needs a one-on-one mentorship, check out the description. This is Mulham, and let's get into it. So I'm going to start with one thing here. So it's weekend now. If I go back to the previous agent session, what do we see here? There is a small sweep, price went lower and lower. We go again here, what do we have? This is the losing trade. It was a sweep, price only went here and then kept going lower because there was some high impact news here. We go to the previous one, what do we have here? Agent session, sweep with a small body closure and then going lower and lower. If I go here again, this is Tuesday, what do we have here? The price sweep the Asian range with the wick and then went lower and lower. You see how low it went? Now to the previous day, and this is Monday, what do we have? Now this is the Asian low right here. Price switched with the wick, went up and up and up, all the way right here, all the way up here, and then sweep here, all the way down there. So those are the opportunities. I'm gonna go in details over all of those, each one by itself. How do you enter? How do you execute? It's not 100% fully mechanical strategy because I don't believe in this. I believe that every trade and every day there is a specific scenario you gotta adapt with. There is no one thing that works with all the scenarios. You gotta adapt, you gotta be flexible. That's how I do it at least. Today's video is sponsored by Hanko Trade, one of the best brokers in the business with spread as low as zero, low commission, and you can trade all markets including Forex, indices, and crypto. And if you use the link in the description, you will get an exclusive 100% bonus. Make sure not to miss it. Let's get back to the video. Now, if we zoom in the first day, this is Monday, and this is my agent range. For some reason, it doesn't draw the real zone. So this is my agent range right here. This is the low, and that one is the high. Now this is 115, 145. This is the low of the agent session, and this is the high. Okay, going back to the 1 minute, see what's happening here. And this is the start of the Killzone, 2 a.m. Price is going lower, so price took the Asian low. Now what we wait for is displacement with a fair value gap to enter from, or whatever the market gives us. I'm really flexible with this because I got used to the strategy. So I took different scenarios, and you will see in this video that in every trade I take a different entry. I'm not saying this is the right way for you. I don't know about your situation, but for me this is what has been working with me. So price is below the liquidity level. I want to see price coming back into the range. And that's, yeah, there you go. So price now is above the range. So this is the manipulation. If we go to the higher time frame, for example, 5 minutes, we'll see this, or maybe 15 minutes, we'll see this as a wick. You see, you'll see this as a wick. So back to the 1 minute, what do we have here? There is a fair value gap, and price is back into the range. What we can do is enter from this fair value gap, stop loss below the low, give it some room to breathe. And then what we target is this high, and also extend it to something like this fair value gap, and then finally the Asian high. So this would be something like 10 to 1. Price goes to the entry. Now another entry is this fair value gap here. If price comes here, you can also enter from this. Why? Because what we had here is this. There's a fair value gap. Price coming to the fair value gap, respect it, and with displacement creating another fair value gap, which means that the second fair value gap would be respected also. So we can apply this here, or we can look for another entry on the higher time frame. Let's see what we have here. Price going up. What I'm seeing here is this. Another entry is this breaker block right here. And what does it align with? A fair value gap. And also there is an inducement. There is a low that has a fair value gap below it. That's where price can come and then go to the upside. If we go to the 5 minutes, we can see this in a much clearer way. We can see this is the breaker block, and there is unfilled fair value gap. Where in the lower time frame, there is an inducement here. So that's a high probability trade right here. This is the one that I entered. This is the one that I was seeing also. I did not enter this one, but we can do this. An entry here, slightly below the low, because this would be swept. So something like this. And then a stop loss, I would just put it right here, below this level, because there's no point of price coming lower. And if price is respecting this, there's no point of price coming here. We can still target the same take profit. This is only a 2.5. What you can do here is, because we're having two zones, this is the first one. What we can do is this. Instead of risking 1% here, what you can do is risk 0.5% on this trade. This is 8.6. And then if it doesn't work, what you can do is enter another trade just from here, from the extreme fair value gap with a stop loss like this, with 0.5% risk. So that's what I suggest doing. So let's stick with this one and let's play. Now the first trade is on profit. This is the one that I entered. The second one, it's still not filled. And we can see that price comes to the entry. Started going up. What do we have? What did I say? I say that when we have a fair value gap, price comes here, goes up, creating another fair value gap. What is this? A high probability fair value gap. This is the same thing here. What do we have here? We have fair value gap created after price respecting this fair value gap and taking liquidity. So liquidity taken, fair value gap respected here, another fair value gap is created, price comes back here. That's another potential entry, something like this. With a stop loss just below the low, and then target the same take profit. This is a 3.9 or 4 to 1, something like this. So that's another winning trade. Is it winning? Price comes there. Okay, still nothing. And then price goes to take profit. So this is a winning trade, another opportunity to enter. And then also there was a fair value gap here to enter, but you know, price is already too high. There was no displacement above this point, so I'm not going to be entering this one. But all of those entry types, this one and this one, would be amazing. 8.6 and 10 to 1. This one I entered, but I did not get 10 to 1. I got about something like 5 to 1 because I took some partials on the way and I did not hold my whole position all the way right here. And price kept going up actually. I remember that. You see, price actually kept going up and you were able to get a lot of reward to risk from this trade. Now this is Tuesday right here, and we can see we have an agent range. This is our high, this is our low. There is no fair value gap above, and also there is no fair value gap below, only order right here. So it's not the highest probability trade right here. However, we can still trade. You know, fair value gaps are optional, but they boost the win rate very high. So we have the high and low right here, and I'm gonna go to the 1 minute. It's 1:59, so now the London Killzone is starting. The price is going up. I'll be waiting for either of those levels to be taken. And okay, not taken yet. Taken. And there you go. It's taken now, and it looks like price is coming back into the range. That's a good thing. Still nothing. And price coming back into the range. Yeah, there you go. So right here, if I was inexperienced, what I will do is I would enter from this fair value gap. So there's a small one here. I would ignore. There is this fair value gap. I would enter from something like this. 50% of the fair value gap, stop loss above the high. And what I'll be targeting is the edge and low. Well, they're right here. And I'll be taking partials at those lows. Right? This one and this one. And after that, there's nothing holding the price. And we have a lot of failure swings right here. So this would be something like 5 to 1. Now, this is not the best trade. And why? Because we have price going up and we have this big fair value gap that caused the sweeping of the Asian high, and price started going up, coming lower. And what do we have here? Not a big closure below this level. It's something like a sweep to continue to the upside. So we're not going to be sure of this trade, or not going to be confident of this trade until there is a nice displacement below this level and below this fair value gap. And also the fair value gap is disrespected, as it will be acting as an inverse fair value gap. So this is not a convincing. This is not a trade that I'll be taking. What I'll be waiting for is for this level to be disrespected first. Going lower, then I'll be entering. So this trade is not valid for me. Not really interested. And right here, we can see that it was really failing until there is a nice displacement below this level. So let's see now if there is a fair value gap to enter from, and we can see that there is a fair value gap that is aligning with this mitigation block here and inverse fair value gap. So the inverse fair value gap is right here. This one, I'll be removing this. Inverse fair value gap is right here, and we have a mitigation block right here, and there is the fair value gap, also another fair value gap. So three things are aligning with each other. I'll be entering from here. I'll be having my stop loss, just above here because this is a big wick. I'm not gonna be putting all the way right here. There's no point of price going all the way there because the liquidity is already taken. If it goes above, above this wick, then most likely the trade is invalid. So I'll be putting it somewhere in here. Okay, I'll be giving it some space, and I'll be targeting the Asian low. And let's see. The price comes there, the fair value gap, and started going lower. And there you go. It doesn't take even 10 minutes. Immediately to the take profit, 4.6. And I believe that it went lower and lower. You see, price continue going lower on the London Killzone. And you could have gotten all of this, right? And then if we switch to 15 minutes very quick, see how far it goes. This is our trade. See how it's a amazing trade. And you see how price was really continuing to the lower side. Even New York was a continuation to the lower side. So that's a huge trade. No drawdown, amazing trade. Now into the next day, and this day is a little bit different. So you're going to learn something new here. And remember, all of those stuff that I'm explaining now, we did not go in details over at all actually over the higher time frame analysis. We did not do any higher time frame analysis. When we do that, it's gonna give us a higher win rate. It's gonna give us further targets, so we're gonna have much more reward to risk. But in this video, we're only focusing on the entry type, entry technique, and what happened exactly. But we're not gonna cover the higher time frame analysis. Maybe on another video, I'll show you how I do that in this setup. So what do we have here? Trending Asian, so it's not the highest probability. However, we're still gonna trade it, see if there is something that is worth it. We have Asian low, Asian high, and we actually have a sweep before 2 a.m. So before the London Killzone comes, we have a sweep, which means that there are two scenarios here. Those are scenarios that I see from experience. So it's either price, for example, let's say this is the Asian range, right? This is the Asian range. So it's either price sweeping before 2 a.m. and coming lower with no displacement. Here is 2 a.m., another sweep and comes lower. Or there is the same range. This is before 2 a.m. The sweep happens and then big displacement. Now I'm not going to be waiting for this high to be taken after 2 a.m. No, I'll be waiting for a mitigation of a fair value gap here, if there is one. If there is nothing, then I'll be waiting for a sweep again. So let's see what we have here. So we have the sweep happen here, and we have price coming lower. So the change of character would be something like this at this level. And there is the change of character. I'll go to the 1 minute just to see if we have any setup here. So it's still not 2 a.m. I'll let it run until 2 a.m. Almost there. And this is 2 a.m. So far, do we have any entry here? Nothing. Nothing. If we go to 5 minutes, see what's happening here. Actually, on the 5 minute, we have this inducement right here and a fair value gap. So that's something that we can look for. We can look for price to come up here and then go lower, right? Because we already have the change of character and everything. And also, if you apply the OTE from this high to this low, this is on the, it's about 50%, and we have 62 right here. So we might be entering from somewhere close to 62%, right? So I'm gonna remove this, go back to the, or actually 5 minutes, and I'm gonna be marking this high and also the fair value gap, the 5 minute fair value gap. You can also look for 15 minutes. If we go to 15 minutes, see what's happening here. We also have a fair value gap here. This is the 15 minute fair value gap. Going back to the 1 minute, there is also another high here, this high and the fair value gap. Let's see if price comes to the fair value gap and then we see something. So price goes lower. Okay, actually goes lower. And now going up. So we can also apply the OTA again here on the 5 minute range or 15 minute range. And we can see now that 62 is now aligning with the fair value gap. So that's a good thing. Let's see. The price still doesn't take this liquidity level, neither this one. And now it goes to the fair value gap, a little bit up more into the OTE zone. And now we have a fair value gap. There is a fair value gap here on the 5-minute fair value gap. So if I mark this and put it on another color, so we can enter from somewhere in here. So 50% of this range, for example, and then a stop loss just above the high, slightly above the high, and we can target Asian low, and then we can extend it to the -1, right, of the OTE. So let's see. We're gonna keep an eye at the Asian low. If there is a big reversal, then we're gonna exit there actually. So let's see. Looks like we get an entry here, I guess. But yeah, so we get entry, 0 drawdown, no drawdown at all, and then started going lower. We have a fair value gap here. Another entry is entering from this fair value gap, but I'm not gonna go 50% here. I'm gonna go the overlapping of the breaker block and fair value gap. So another entry would be something like this here, and a stop loss just above this high, and then we can target the same target, for example. So let's see. And it looks like price did go there. You see the accuracy of the trades that we are taking here. Price actually comes here to the breaker block. Not sure if we get entry here, especially with the spread and everything, if we are in a live market. And then price goes lower. More rejection from here, from the Asian low, but then continue to the downside. And we get the take profit. So both take profit. This one is right here. Both take profit done. 7.3 and 10 to 1. Huge trades. And actually, I'm not sure if price will continue to the downside, but if we go to 15 minutes just to see what happened, it looks like price is reversing. So let's see. No, actually it went lower. So it could be something like this, like 20R. So huge trade on Wednesday, very huge trade. Now going into the next day, and this is Thursday right here. So what do we see? We see a huge trending market on Asia. So Asian was kind of trending. It was not ranging. We know that when it's ranging, it has the highest probability trades. Now this one is not ranging, and let's see, 1 a.m, 1:30, and then was it a sweep? It doesn't look like a sweep. It looks like an equal low. So going back to the 1 minute here, what do we have? So this is the Asian low right here, and let's see. The price is still above. Now it sweeps the Asian low, and price is kind of rejecting also from this fair value gap to the downside. No displacement, no fair value gap yet. There is a bearish fair value gap. And now there is kind of not a big displacement actually right here. I'm not going to be entering. It got rejected from this wick right here. So it's not the highest probability. No displacement at all. But let's say that we're going to enter from here. Why? Because price came back into the range with a fair value gap. So if we enter from here, stop loss here. This one I did not enter. Why? Because there was some high impact news on New York. So when we have a high impact news, that means most likely the probability of the trades on London are so low, because there is not much volume on London when there is a high impact news. Usually all the volume comes after the high impact news. So for this one, we get the entry and then stop loss immediately. The price actually swept the low and then continue it to the lower side. So this was not a good trade. The first losing trade that we're having now. And right here, there's kind of, there is another sweep. Price coming back into the range, and we see this is still not the best scenario, but still this is kind of a displacement compared to the previous candles. I'm not gonna trade this one, but a potential trade is an OTE. You can see that 62 is right here at this fair value gap. So if you wanted to enter OTE trades, it would be something like this. Maybe have a stop loss just below here because there's no fair value gap, or could have here below the 79, or all the way right here, right? It depends. You want to play it safe, put it right here. You want to play it risky, put it right here, and then target, for example, 27, minus 27, or minus 62, or minus 1, all of those. This is a 8 to 1 huge trade. Let's see. Let's come lower and respect the 62 actually. my trade would be different. I'm not going to be entering this trade. What I'll be doing is waiting for this level to be taken. I want to see price losing the momentum here, coming lower, sweeping this low, then I would be entering here. I always want to see liquidity sweep before entering a trade. So this is not my main entry. This is an OTA entry, which I'm not a big fan of because there's no liquidity sweep. Only this one that happened, but I want to see another one. So price actually coming back into the entry and then go to the minus 27, continue to the minus 62. And then there is a sweep here and big displacement to the downside. So it might be just going to minus 62. If I see this, I would be almost closing the position here, and we see price actually coming lower, going up, and it was ranging here. So it was the end of the London Killzone. So for me on this day, no trades. I did not have no trades. And if someone wants to make sure that I'm not just going back using the replay button and not seeing all of this in real time, go to the Discord, go to GU live trading channel, scroll up, see what we were doing. Every day we come on the London Killzone, we look for the same setup. And every day people catch good setups. Every day, me and all of the people trading this setup, we always catch such trades. So this one, if you were only aiming for -1, it would be a losing trade. If you secure yourself, I mean, it gave something like 66R. That's already huge. There was the high impact news right here, and then it was just a miss. Now going into the last day of the week, which is Friday, and this day it was good for some people, bad for some people. So let's see right here what happened is price before 2 a.m. we're almost at midnight. It took the Asian high and it was kind of, no big displacement on either side. Price closed above, came back lower, goes up, and then kind of still with wicks, no big displacement, and some displacement right here. If I go to the 1 minute, what do we see here? Price is kind of consolidating above the Asian high. So this is the Asian high. So went up, came lower, went up, came lower, went up, and we had a big fair value gap right here, and then a sweep of this high coming lower. So there's nothing so far. There's nothing. I'll be waiting for the London Killzone, and this is the London Killzone opening. What we have here is this sweep. We have a sweep and we have a fair value gap. So there's no big displacement right here, but some people actually entered from here, from this fair value gap. Why? Because it opens. This is a good candle on the opening of the London Killzone, and we are above the Asian high, and it offers a fair value gap. What some people did here is entered from the fair value gap targeting the Asian low. So this would be like 8 to 1, something like this. Me, myself, I did not enter that one. So we give the entry here at the fair value gap, fill the fair value gap fully, and then it started going lower. There was a very small fair value gap here that I did not see. So no entry for me at this point. Price simply started going lower. There was no entry for me. And I'm not sure if it's going to take the... So it did not take the Asian low yet. And then took the Asian low. So there was no trade for me so far. But then there was a trade that I took with half risk. So instead of risking 1%, I did risk 0.5% taking this trade. And I'm going to explain it to you right here. So yeah, I think it's this one. What do we have here? We have this liquidity level and this one, failure swings. And we also have this fair value gap here, this extreme fair value gap, and also an order block or mitigation block in the lower time frame. Price comes here, and what do we see? Price came inside, candle, another big candle, and then a fair value gap created here. So I entered from here. So I entered from this fair value gap right here, and 50% of the fair value gap closed just above the high of this candle. And because the Asian low is already taken, what I targeted is only this low and also this fair value gap. So 50% of this fair value gap, that's a 7 to 1 huge trade. Price actually come to the fair value gap, you see, fill it fully, and then to take profit immediately, no drawdown, nothing. So that was a huge trade, and I'm not sure if price took the Asian low again. I mean, it did go below the Asian low, but not this one. not this new low. So this is my trade. This is what people in the Discord entered. And there are some people who entered long here, I guess. This is the week of trades. I'll go over the opportunities and trades for the past week. I'll do this in the future if you guys want to. Make sure to join the Discord to discuss all of this live. We do this every day live. Most of those trades that I'm talking about here, and only people on the Discord can relate to this. They know that we discuss all of those and we see them live before they happen. If you guys like this type of content, make sure to like, subscribe, leave a comment, and I'll see you in the next video. Bye-bye.